Good morning, ladies and gentlemen, and welcome to the show on this Tuesday, the 6th of July, 2021. Thank you for tuning in. I'm going to tell you guys what. I might have been a little bit generous thinking that the crash could come somewhere between January and July of next year. But I was sitting there thinking, how long is this money going to last? Tremendous money creation that they've put out there. Trillions in stimulus packages, heap one on top of another. But suddenly, the brakes come on, and it all stops. Okay? It's all stopped now. And the Fed is out there with this reverse repo facility. It's almost like they're sucking up liquidity. The banks are exchanging the reserves, which cash, money, exchanging them to the Fed for different types of collateral. And that's drying up the system extra fast. Maybe I'm a little bit generous thinking it'll hold off right up until sometime into the next year, you know? Because we're getting signals right now, guys. Today, we're getting signals that not all is wonderful in the markets today, you know? Today is the first day we've really got a real strong signal that things are teetering toward a crash. Okay, it's almost like if you're near a volcano, you know. He says, "Oh, that volcano's not going to blow up until next year," you know. But you feel the ground shaking, and then after a while, the ground shakes a few times, and a few spurts of smoke come out of the volcano, and the guy says it ain't going to go off till next year. He might say, "Hey, you know what? maybe I'm a little bit. Maybe it might go off this year." Well, we'll see. Because the ground is shaking today. When we're seeing bond yields fall as much as they fell today, massive fall in bond yields today, you know, and the dollar's going up, and everything else is taking a hit. Let's get in there and take a look at the markets today. Let's open up the charts right here and take a look. Look at silver price today. Look at this hit it's taken right here. 27 cents. 66.20. But it's a sudden drop. Everything's changed direction at the same time. Let's get in there and take a look at gold now. Gold is at 1802 and it's up $10.50, but it's dropping right now. Let's take a look at cryptocurrency. Cryptocurrency's holding fairly stable. It's at 1,430 billion. Refresh page 1440. And so we're seeing a Bitcoin price of $34,064 today. So Bitcoin's being unaffected right now. Except that the Dow is taking a rather steep decline right now. It's down 319 points. 34,466. This is like a shock or an earthquake at the foot of a volcano. And the biggest reason why I'm saying that is the bond market. We're going to get in there. We're going to take a look at that in just a minute. Let's get in there and take a look at oil. We're seeing a rather large steep drop in oil too. It's down 2%. It's down $1.55 at 73.61. Okay, move index today, and it started to drop. Move index is it says here it's up 2.8 points, but overall it's starting to drop again. The move index is what we see here. Let's get in there and take a look at the bonds and rates today. And this is the big one right here. Boy, look. Well, it's not as bad as it was a few minutes ago when I looked. It was 7 basis points a few minutes ago. Now it's 6. It's dropped back a little bit. But we're looking at a U.S. 10-year at 1.37. And we're looking at a U.S. 30-year broken down below 2 at 1.99. So there's heavy buying in the bonds today. They're piling into bonds today, and they're driving the yields down. So because the bond market works in reverse, guys, when it falls, it means it's going up. Uh, I know that's crazy, but that's the way it works. So we're seeing falling yields today, and that means bonds are being snatched up or bought. All the other markets work in the opposite way from that. When people are buying, you see the market go up. In bonds, when they're buying, the market goes down. I know it's kind of counterintuitive, a little bit hard to understand, but that's the way it works. So we're seeing heavy buying into the bonds today. They're buying them. We've seen a drop of 6 basis points on the U.S. 10-year, down at 1.37. That's the lowest we've seen for a while. Okay, let's take a look now at the dollar index, and we're seeing it rising today. 92.52. So strong dollar. I'll tell you guys what the crash is going to look like when it happens. Now, see, this is a problem for me on my channel. It's been all along. Not so much forecasting what's going to happen. I generally get that right. It's the timing. I've been off on timing so many times it's not even funny. My forecasts have been wrong hardly any. I've got my forecast correct so many times it's unbelievable. But my timing has often been wrong. I get my timing wrong a little bit. It's very difficult to time some of these things, like a market crash, you know? Now, I can tell you guys a market crash is coming, but I often get my timing wrong. And so, yeah, sure, it could occur before the end of this year. Just because I've told you guys, hey, it's going to come in the first 6 months of next year, that's when I'm trying to get my timing right. But heck, it could come this year. It doesn't have to wait until till next year. It could come this year. The markets are way overpriced. It's ready for it. And if the Fed dries up too much liquidity through this reverse repo operation. So what's the crash going to look like? You guys want to know what the crash is going to look like? It's going to be fast when it comes. It's going to be a lot of fear in the marketplace. And the market's going to drop like a stone. It's going to look very much like what happened at the beginning of the COVID crisis. Do you remember how the markets dropped at the beginning of the COVID crisis? It's going to look like that. And in fact, that would have been the big crash if the Fed hadn't stepped in with $2.2 trillion stimulus package. That's what turned everything around. That's why they did it. Well, they're going to do it again. But, this crash that's coming, its potential is even greater, and it's got more downward energy. It's going to have more downward energy than the crash that occurred at the beginning of the COVID crisis. And they're going to step in again. It's just that they don't have a big excuse like they had with COVID. They had the perfect excuse with COVID to step in and dump money. This time, no real big excuses, so they're going to have to let the crash proceed till the crash becomes the excuse. In other words, the crash becomes so severe that then they have their excuse because the crash has generated the excuse. Oh, look, everything's going bankrupt within the system. We've got to do something. They're going to have that impetus before they're going to be able to do what they need to do, which is basically print a whole bunch more money. Isn't that the only real tool that they have? Because I'm going to tell you guys what. This crash, if they didn't print a whole lot more money, it would be unstoppable. It would just keep going until it completely purges out the system of all of the excesses that we've built up over so many years. All of the credit binge that we've been on, it would all purge out. And it would get down to the point where the system would actually lock up, because there is actually, money is a creation of credit and debt. And when you try to pay all the credit and debt off, all the money evaporates into thin air. And that's what it would do. That's what it would do if they didn't stop it. They're gonna step in about halfway into the crash, and they're gonna stop it. And I've said this all along, that there's going to be a big Fed announcement. So, if you're holding dollars and you're trying to profit off of that because of deflation, There's going to be a very short window there where, yes, you could profit off of holding dollars. But when the Fed makes their big announcement, in other words, mid-crash, when the sky's falling, they're going to make a big announcement about what they're going to do. They're going to come out and say, we're going to do this stimulus and that stimulus, or we're going to buy this, or we're going to buy that, or we're going to do this and do that to stop the crash. At that very moment, it's going to create a paradigm shift for the dollar. And if you're in dollars right then, you're going to get trapped. Because the dollar's going to go from being the king 1 minute when the crash is happening and everything's deflating to being the big loser. It's going to be the big knockout blow for the dollar when they have to finally step in and stop this crash that's coming. So if you can get trapped in dollars is what I'm saying, because this whole thing can turn so fast, and it's going to be expected that the Fed's going to have to do something mid-crash. When we're in the crash and everything's falling, we remember what the Fed's always done. We'll remember that they're going to have to stop it at some point. So the people that are in the know are going to sit back and say, hey, this is going to happen. The Fed's going to step in at some point. But what's the point they're going to step in? They might let it fall further than we anticipate before they finally step in. It's because they had a perfect excuse to step in during COVID. But this time, where's their excuse? They're going to have to wait until the crash becomes the excuse. So, might fall further than we think, and so be prepared, You could see a vast, huge drop in prices of some of these asset classes, like cryptos, in the market, too, and all the markets, could see a massive drop in the prices, decline, but on the other side of that, they're going to go up once the announcement's made. So all these things, these speculative investments, crypto, and things that are not speculative investments might take a bit of a cut or a hit too. Things like gold and silver. They're going to go up after the crash ends and after the big announcement's made. But the dollar's going to be the exact opposite of that. It's going to be going up before the announcement's made, and then that's going to be the resounding call that's finally going to lose faith in the confidence in these fiat currencies. Boy, it's taken a long time. It's been a slow, withering ride getting to the point where faith is lost in the fiat currencies. People love to exchange and love to use fiat currencies as a means of exchange and as their go-to source for the dollar. They like being in the dollar. They like using the dollar. And the reason why is it's accepted almost anywhere on earth. It's accepted means of exchange. And it takes a lot to force them out to where they say, hey, I don't trust this anymore. Now, some people out there, percentage of the people, realize this is coming ahead of time and they don't trust it now. But the vast majority of people out there, it takes a lot before they finally go thumbs down on it and they don't trust it anymore. But we're going to see that time come when they reach the point where they don't trust it anymore. And I think this is going to be the final straw when the Fed comes out there and has to fix this next crash with money printing. On the other side of that, that's when you're going to see the big rise in all of these asset classes that are out of the dollar. Thank you guys for listening. Like and subscribe, and we'll catch you guys in the next show. Bye-bye.